Thank you, Shireen. Rashyid, you have been helming the sustainability practice at Sime Darby. Can you share with us some of the good work that Sime Darby has done to ensure that its palm oil operations are sustainable?
Thanks, Rafi, for the question, and thanks for inviting us to share some of our experiences and our approach to responsible agriculture. So just to give a bit of background for on Sime Darby plantation, right? We are the largest producer of sustainable palm oil globally. And with regards to our practices, right, we are in the agriculture sector. And when it comes to sustainability, it's not a new thing for people operating in the agriculture sector. It's just previously it was called, good environmental practices and good social practices. And it's evolved over the years into what people tend to coin as sustainability or ESG practices, and so on and so forth. But for us, right, essentially the foundation of our operations is basically the certification and adoption of sustainability related standards. So in the palm oil sort of industry, there are a few sustainability standards which are adopted. And one of the key ones that we adopt is basically the Roundtable on Sustainable Palm Oil, the RSPO, where 100% of our global operations, which spans across Malaysia, Indonesia, Papua New Guinea, Solomon Islands, 100% of it is certified to the RSPO, and also other sort of certification standards like the national standards in Malaysia, the Malaysian Sustainable Palm Oil Standard. So that is essentially the base of our operations. But the approach that we take essentially, is that we try and go above and beyond certification, and that's where our whole sustainability program looks into three key areas. Number one, we try to contribute to a better society. So this is by implementing fair labor practices, enhancing our safety and health systems, and also working with communities surrounding our operations as well. The second one is basically, how we look to how we can have a positive impact on the environment. So that is essentially, looking at how we can contribute to climate action, how we can further enhance and implement our efforts around conservation and biodiversity, and also, looking into how we can adopt a circular approach when it comes to our operations as well. And the third sort of key thrust that we have around sustainability is, our approach for delivering sustainable development. And what that means is basically going beyond our boundaries. So in looking at how we can get, our supply chain, smallholders and suppliers to also adopt similar practices that we have, and also how we also, work and participate in multi-stakeholder platforms and all these standard developments to further improve, the standards that are already out there. So that's the typical, the basic, the approach that we take when it comes to sustainability, and it's all articulated in various charters and policies and practices, which are then translated to the ground. So I guess that's a brief introduction on our approach to sustainability. And Rafi, on your side, right? I mean, you've been involved in responsible banking and sustainable banking for quite a number of years. What have you seen that has changed in this past few years?
Thank you, Rashyid. We have come a long way. If you look at CIMB's journey into sustainability, it all started with what we call value-based intermediation as part of the strategic pivot for Islamic banking back in 2016 and 17. And from there, we evolved into what we call the sustainability ambition for CIMB Group. We are a regional bank with footprints in ASEAN and headquartered in Malaysia. And it was an important strategic initiative for the group to drive this sustainability agenda across the group businesses. So as any new initiative, it goes through 4 stages in its life cycle. So the first stage was the forming or formative stage, which was quite challenging, but it was a lot simpler than the next 3 stages, where we need to craft the strategy, the ambition for our sustainability targets, and get the buy-in from the senior management, and build the team, create the policies, and so on. The next stage was what we call the storming stage. Once we have formed, there were lots of issues around what we mean by negative impact. Because if you look at the sustainability agenda, it revolves around identifying the impacts, both negative and positive, and have a clear plan to reduce negative impact and in tandem grow the positive impact across our business lines. So one of the areas we looked at is how do we define high risk or high negative impact businesses. So we then came up with high risk classification, where we looked at our portfolio of financing and then looked at the both direct and indirect impact, whether it's scope 1, scope 2, and scope 3. And then we narrowed down to a few high risk sectors. So the likes of coal, palm oil, mining, and so on. So there were a few sectors we categorized as high risk, and those high risk sectors would be where we would be focusing on reducing the negative impact. At the same time, there was a lot of discussion, storming issues around what are the positive impacts that we should focus on. So positive impact would be around promoting more green financing along renewables, low carbon intensive industries, regenerative agriculture, EVs, hybrid cars, and so on. So it took a while for us, although we have the clear strategy for sustainability, but it took us some time to really nail down the details. Now we are at a stage where we have normalized. We know what we mean by negative impact, which we call the footprints that we have created through our financing portfolio. And we have a clear plan in terms of how we're going to address and reduce the negative impacts. And also we have a target in terms of building the positive impact. So we have a target to mobilize about 30 billion ringgit of our financing and our mobilization in terms of facilitating financing by 2024. That's a 30 billion target in terms of sustainable finance mobilization. And at the same time, we want to make sure that we have a net zero operational emission target, which is our own scope 1 and 2 by 2030, and net zero operational and finance emissions, which include scope 1, 2, and 3 by 2050. Now, at a macro level, we are also seeing the regulator playing a more active role. They have come out back in May 2021. They have issued a climate change and principle-based taxonomy, looking at principally physical risk, transition risk, and liability risk that the financial industry is facing from the climate change, and giving us 5 guiding principles in terms of how to categorize our various financing that we have given, in terms of whether it's climate supporting or transitioning, whether there should be watch listed, so that we can then take the necessary steps to address those issues and have a clear timeline in terms of how we will reach towards our net zero target by 2050. 2030 is operational emission, and 2050 is both operational and finance emissions. So looking back, we have come a long way, but looking forward, we see the journey is even longer and arduous. So it is definitely a challenging time to be. And Rashyid, in terms of what Sime Darby has achieved, what could the finance industry improve on to help you to further meet your targets? Have there been times when pressure for quarterly earnings have made your transition towards sustainability look more difficult and complex?
Thanks, Rafi, for that question. I think like what you mentioned previously just now, right? You know, what we've seen is there has been a significant increase in interest from the finance industry around ESG and how companies that they are financing are operating around this, right? And what we would like to see more is an increase in the sort of engagements and dialogues with the corporates with regards to, you know, whenever you sort of try and come up with the policies and, you know, the sort of decisions that you make. Because, you know, with regards to engagements with the particular corporates, right? I mean, each and every industry would have their different sort of challenges, the different sort of nuances, which you can only get to know better, you know, if you have increased discussions and dialogue. You know, like what you mentioned just now, you know, once you have identified, you know, the sort of high risk sort of industries, you know, then, you know, a deep dive into those particular industries would be very, very useful, because then, number one, you'd be able to then further understand what the challenges are that the corporates actually face. And also on the corporates as well, we can then further understand, the expectations from the financial industry on, how they expect, corporates to sort of practice, right? So I guess, that's one area, increased engagement and dialogue. Secondly is, once you have identified, the sort of key high risk areas that you want to understand and deep dive further, there needs to be also further involvement from the finance industries with all the multi-stakeholder platforms which are already available within those particular industries. So, for example, in the palm oil sector, we have the Roundtable on Sustainable Palm Oil, where where this is a platform where multi-stakeholders come together to chart the course on how sustainable palm oil should be produced. And this is something that, on our side, we were founding member of the RSPO way back in 2004. And, we have been constantly engaging throughout the process to work together with, customers, with civil society organizations, to basically further refine and improve the standards. Number one, to improve the standards, and number two, to try and get more and more sort of stakeholders involved in the process as well. Because once you actually get involved in these platforms, you would then be able to really understand the challenges that are being faced by the industry, and also be involved in developing solutions on how practices can be improved on the ground, and also have a better understanding on how the finance industry could also participate in the development and implementation of these sort of solutions. And I guess the third area that I like to sort of also highlight is basically again with regards to the engagement of the of corporates from the finance industry as well. What we've seen is that that we've seen finance industry, players in the finance industry moving from a tick box approach to a more engagement with the industry approach, right? And this is quite key as well, and quite important as well, because for example, on our side, with regards to our suppliers, whenever we have issues within our supply chain, we always try to engage with the suppliers as much as possible, to try and influence them and work with them to improve their practices on the ground. Because we also understand that once we disengage with any particular supplier, although we are no longer associated with that particular supplier, but there's actually no change on the ground happening. So the key point here is that we want to effect change on the ground, and that cannot happen once we disengage with a particular supplier. And I guess that's something which the finance industry should also take note as well, because by disengaging with corporates, nothing changes on the ground. And at the end of the day, what everybody wants is basically to effect change on the ground. So I guess those are some of the key things that I probably wanted to highlight with regards to that. But when it comes to the finance industry, Rafi, I mean, like what you mentioned, right? Most of the impacts associated with your business come from the companies that you finance, right? So like what you mentioned, your scope 1 and scope 2, that's your current focus. But your scope 3 is basically where the significant amount of impact is, right? So from your point of view, from the finance industry point of view, what sort of changes would you like to see from the corporates?
Excellent, Rashyid. I think I'm really delighted to see the kind of initiatives that Sime Darby is going through in terms of making it easier for us from the financial side to really measure and understand the risks that you are exposed to. From, as you rightly pointed out, the scope 3 emissions, or what we call the finance emission, according to CDP, for the financial sector is 700 times greater than our own operational emissions. So our scope 1 and 2 is quite minuscule. And if you look at the challenges that we're facing in terms of measuring the finance emissions, a lot of companies don't have enough data. And even if they have, they may not be able to disclose, or they're not willing to disclose their what their scope 3 emissions. So if you look at most companies, for example, company A, let's take company A, they have say 100,000 CO2e emissions. Typically, they will show more coming from their scope 1 and 2, but not able to show their scope 3. Because if you look at many sectors, it varies. What is the ratio between scope 1 and 2 versus scope 3? Some companies, that Nestle has disclosed that their scope 1 and 2 emission is only 5%. 95% is coming from the supply chain, from the agricultural side all the way to midstream to downstream and so on. So for us to meet our net zero financial emission target by 2050, we need to have a better understanding of the scope 3 emission that's coming. Basically, we need to have better disclosure. And this is where I think corporates can help us in terms of coming up with better disclosure. As you highly pointed out, that would require you to understand your own supply chain. What are the emissions involved in every step of the supply chain? And that would be crucial for you to disclose the data, which we can then pick up and then complete our journey by saying our indirect exposure through the financing of, for example, primary agriculture sector is X amount of CO2 equivalent. Then we can have our what we call science-based target initiative. For example, SBTi has clearly has given certain what we call methodologies for us to measure and also to reduce over time. So this is where we think corporates can play a bigger role in terms of disclosing the scope 3 emissions. Another way to look at it is, if we are not able to get the data for individual companies, then we have to look at it on a portfolio basis. So there are reports available for primary agriculture, for power generation, oil and gas. At a portfolio level, what is a typical scope 3 emissions, for example? We can then translate that into our own portfolio exposure, and we can then identify if we have given, say, 50 million financing to this particular company, and this company has 50 million in equity and 50 million in debt, the total exposure for us would be whatever the GHG emission that is coming from that particular company based on a portfolio basis. We then take 50% of it because we have financed 50% of their funding. So this is one way for us to measure. And from there, we then create a timeline where we have to progressively reduce that exposure and in tandem build more capacity on renewables and other positive impact sectors so that we can transit from this medium to high carbon intensive sectors to lower carbon intensive sectors. So this is where I think corporates can really help us to better identify the scope 3, and we can then have a clear plan. And Rashyid, if you look at in the finance industry, most of the impacts associated with your businesses come from companies that you finance. Sorry, from the organizational perspective, how has the organization been able to deal with challenges regarding sustainability or ethical concerns? Did it impact upon ESG ratings? I'm sure you have certain ratings that you would like to track. And how did you deal with that, if there had been any impact to the ratings that you have been targeting?
Yeah, thanks for that question, Rafi. And just to also echo your point with regards to, when it comes to scope 3, that essentially is the big challenge which a lot of companies face. It is basically, although your focus and priority, at the immediate term is basically looking at your scope 1 and scope 2, but eventually further down the line, you definitely would then need to start looking at your scope 3 emissions and other sort of scope 3 impact as well, because then you'll be able to sort of have a holistic approach to the way that you do sustainability, right? So with regards to your question itself, right? When it comes to the sort of ESG or sustainability related concerns and ethical concerns, those sort of things, right? Sustainability and itself is evolving. So things which we practiced 5 years ago there has been developments where, there are new standards, new expectations, and new sort of regulations which come into play. And these sort of things, on our side, we definitely don't pretend that we have all the answers to it, right? So that's why, the way that we approach it again, is again, number one, first trying to really understand what these concerns are. And this is how we actually take a very comprehensive approach to engaging with our stakeholders. Again, the same sort of word, right? Engagement, where we engage with our wide range of stakeholders, our customers, civil society organizations, even the financial sector as well, to try and understand what exactly the concerns are and what the basic what exactly the issues are that we need to sort of rectify. And once we sort of really have a good grasp on what the concern and issue is, and then we basically get to work to basically resolve these issues. And the approach that we take is, we always take a collaborative approach where we work with multiple stakeholders like customers, civil society organizations, to basically work together with them to co-create solutions for this for these issues, because we understand that we can't do everything by ourselves, and we need partners to sort of work together with us to solve some of the key challenges. So things like where monitoring of our supply chain, for example, we actually work with third-party partners to utilize satellite monitoring technology to monitor deforestation within our supply chain. Or we work with for example some of our customers, Nestle, and a third-party solutions provider to sort of develop grievance mechanisms which are available to our workers in Malaysia, which are available in the different languages. So by working with multiple stakeholders and multiple partners, we feel that we can have a more comprehensive solution to sort of respond to the concerns and challenges that we have. And one thing that we also do is, once we have started implementing, changes on the ground, we also go back to our stakeholders to engage with them, to basically, number one, try to get our stakeholders to really understand, the sort of work that we're trying to do on the ground, what challenges that we face, and the sort of progress that we are making in rectifying or resolving some of these challenges. And what we've seen is, we're getting a positive response from our stakeholders around the sort of disclosures that we do, and also the sort of engagements that we do with our stakeholders. And we spend quite a lot of time as well, with the finance sector as well, our investors, our shareholders, our banks, to try and explain, these are the sort of initiatives and the sort of challenges that we face. So I guess, when it comes to the finance sector, right, Rafi, on your side, on your side, if your side would have some concern about a client that you have, how would you approach that, right? Would you look into ratings, or what's the decision? How do you go about making a decision whether to stop or not doing business with that particular customer? And what's the approach that you take around there?
Sure, that's a great question, Rashyid. If you look at the process that we are following now, as I highlighted to you, one of the first challenges we did is in terms of identifying the high-risk sectors. So I mentioned 3 earlier. So the total high-risk sectors we are currently focusing on is palm, forestry, oil and gas, mining, construction, and power. And these sectors, we don't have much exposure, thankfully. Given the size of our portfolio, the exposure to palm oil is around or less than 3%, and power and particularly coal is less than 1%. So when we look at these high-risk sectors, whenever there is a request for new financing, we typically would do what we call an enhanced sustainability due diligence to better understand the risks involved. So in 2021 alone, we had done about more than 400 ESDDs in related to various financing across our network. And typically, we recommend, if there are certain concerns, as you pointed out, what would we do if there are certain risks that we want to clearly identify and mitigate? We will work with the company, we'll identify the action plans, particularly the ENS, Environment and Social Action Plans, And if you look at the ESDD that we have done last year, around 13% had action plans, that our financing is subject to these action plans being completed. And we have seen, based on our empirical data, about 90% of the clients actually complete those action plans to our satisfaction. So the ESDD helps us to identify and come up with a plan. They're all time bound, and this must be met in order for us to continue with the financing request. Since most of them are complying with the action plans in line with our high-risk sector guides, we are confident that this ESDD process is working. And in relation to what happens if they're not able to meet, given that these action plans are time-bound, we will either work with them to identify the remedial steps, or clearly we may have to decide not to continue with the financing. So these are the options available to us. And as I pointed out earlier, we have gone through the 3 stages: forming, then we have the storming period where we had to identify all the various conflicting ideas and interests. And we are now at the norming stage where we have a plan, we have a governance, we have this due diligence process that seems to be working, but we are now reaching a stage where we have to perform. The performing stage is the most difficult stage. We have clear targets, 30 billion in terms of fund or financing mobilization, and net zero operational target by 2030, and net zero, what we call operational and finance emission by 2050. We now have to really perform in terms of measuring the scope 3 and taking some hard decisions on certain high-risk sectors. A classic example is coal. We were one of the first banks in ASEAN to exit coal sector. No more new financing or new funds going into the coal sector. And we will probably cease from all exposure to coal by a certain timeline. We were hoping, we will be able to complete that. So in a nutshell, we want to engage with the industry to make sure that we have a plan to transit to a low carbon economy. But if there are customers who are not able to complete, despite giving them time-bound targets, then we may have to exit. And that we have made very clear to our clients and to our stakeholders. Now, finally, given the time given to us is coming to an end, 2 minutes, Rashyid, on how you think the finance and corporate world could cooperate and work together to further promote this sustainability agenda.
Thanks, Rafi. So I guess, probably, just repeating myself again. I guess the key thing here is basically engagement, dialogue, and collaboration, right? Because at the end of the day, engagement is key because, both parties would need to really understand the expectations. One is basically on the expectations from the finance industry. And number 2, basically for the finance industry to also really understand the sort of challenges and nuances, of a particular corporate and within the, the specific industry that they work in. And number 2, I think the point that you raised just now, right, with from the last question that we had just now was around collaboration, right? Working together to sort of develop solutions on the ground and to basically see progress being made. And this sort of active participation in collaborating with each other. And just one key point to highlight is basically, this engagement, I feel, should always be the last resort, because in the event that because we want to try and engage with customers or stakeholders as much as possible, because at the end of the day, what everybody wants is changes on the ground, and you can't effect change on the ground once you disengage from a particular stakeholder. So I guess those are some of the key points that I'd like to just summarize. Thanks.
Thank you, Rashyid.
So maybe on your side,
it quite well.
Yeah.
I think you have summarized all the key points. The only one point I want to add is that when we talk about these high-risk sectors, if we can work with you and others within the high-risk sectors to clearly identify, to the extent possible, the scope 3 emissions, and to make sure that there's no double counting. And we then look at the country's commitment under the NDCCs. So under the Paris Agreement, Malaysia has certain commitments. By 2030, we have to deliver. So if you can look at the national inventory of the GHG emission that we have to reduce, and then we dovetail towards the industry-specific targets, so that not only we are reducing our own emissions according to our own targets, but we need to make sure that we are aligned with government's own commitments under the Paris Agreement. So I think given that, palm is within one of the high-risk sectors, and that would have certain impact to our own commitments under the MDCCs, I think it's good we, from the finance side, can work with you on the corporate side to make sure that we are aligned with the government initiatives so that we can not only reduce at the sector level, but jointly contribute towards the government's commitments under the MDCCs. It's been a great pleasure to have this dialogue with you, Rashyid. I definitely would like to see Sime Darby succeed in its ambitions under your stewardship, and we are here as CIMB to help you to achieve your ambitions.
Thanks, Rafi, and likewise as well. I mean, we are always ever willing to engage and support any actions which are needed.
Excellent. Thank you.
Thank you.